Hey everyone, me Kevin here. This is the first time ever that we've talked about futures, but folks, this is probably the most important time ever to talk about futures. The futures market is obviously one that gives us a suggestion as to what might be happening during the next week coming up here. It is Sunday. It is just past 6 p.m. Eastern Standard Time, and folks, we can go ahead and look at the futures board right now. So we're going to go ahead and take a peek at this, and then I really want to talk about my expectations for this week and how they compare to my expectations for this week that I had last week. So these are the American futures right now. We've got the Dow actually climbing up pretty nicely right now in the futures market. Let's make this a little larger here. There we go. So we got the Dow up 211 points, the S&P 500 24 points, NASDAQ up 68 points, so about 0.5% on everything here, which is pretty exciting. It is nice to see green. We did just obviously have the massive $1.9 trillion stimulus package get passed in the Senate. There's pretty much nothing left to stop this stimulus package from going through. The biggest holdup was the Senate. The fact that we got the stimulus package passed in the Senate pretty much almost, I mean, we can knock on wood, but pretty much guarantees that the stimulus package is going to happen. And this is one of the catalysts that we had established on this channel for the market this week. In fact, last week, I put together a few videos and mentioned the catalysts that we want to look for going forward are simple. We want to look at either the Fed coming out with a decision on a rule that's expiring at the end of this month. They have not yet, but that's okay. Or we want to see this stimulus package get passed and signed. Now, we were expecting this to being, more of like a March 10th to March 14th event. The Senate actually slam dunked this bill way sooner than we thought, which is actually a good thing. And things are kind of starting to rally on this. It's almost like the last, since February 19th, we've really had this market sell-off because it's almost like the market was feeling like, oh, maybe the stimulus plan won't happen, but at the same time, we might see inflation coming, right? I don't know that the market was really pricing in or like the good news of this stimulus package happening. That is, I personally think there has been so much fear about, oh my gosh, inflation is coming, it's coming, it's coming. That fear would be here whether or not this $1.9 trillion package passes. I know that sounds crazy, but the market is crazy too. It works in very mysterious ways. But I feel like the sell-off we've had the last 3 weeks was really the market saying, big inflation's coming, the stimulus package seems uncertain, Democrats can't figure it out, we got a disaster, everything's falling apart, everybody sell. It's kind of what it's been feeling like. Instead, here we go. The Senate passes the stimulus package, which the Federal Reserve, one of the presidents, President Ballard over at the Federal Reserve, he thought there was only a 50% chance of this package passing on Wednesday. And I'm thinking to myself, bro, how are you at 50%? Like, I've been at 80% confident that this package is happening. I really think that was almost a sign that a lot of the market was pricing in the bad, but not the good. And I know it's debatable how good the stimulus is, right? Obviously, there are concerns over it. But the point is, at least in the short term, we do expect the stimulus package to have a very positive effect. Not only do we expect poverty to plummet in certainly the demographics of those making under $30,000 a year, but we also expect to see a substantial boost in spending. Could this lead to inflation? Maybe. Obviously, we'll see. The Fed doesn't think so. But I think now that this package is passed, the worst is priced in. The good, I don't think, is really priced in yet. I'm bullish on this week. It's one of the reasons I went so heavy as I did last Thursday and Friday. Now, I wish I could have flipped how heavy I went regarding Thursday and Friday, but hindsight is 2020, right? When you're there and you're buying the dip, you don't know. Like, is it gonna go? Is it gonna go lower tomorrow? you never know. But we do also know that there is a weekend catalyst. We talked about this last week. The 3 catalysts that we thought were coming was the Fed, the stimulus package, maybe inflation data and jobs data, but that happened last week and kind of happened the way we expected. And also this weekend catalyst where, the weekend comes and people kind of, wow, look at how cheap everything is. I mean, remember some of the stuff that we wrote down on Friday, and obviously we won't know what these stocks are opening up for for another, until 1 a.m. my time. So what is that? We've got another 6.5 hours here to go before we know what some of these things are actually going to open up for in the pre-market. But I mean, you look at GHVI, FRX, GoEV, CCIV, Enphase, EXPI, Xpeng Motors, NIO, Tesla, Unity, Palantir. These are companies that have insanely sold off. I would not be shocked to see these substantially green here on Monday. Now, the big question obviously becomes, okay, are we going to have a Monday rally and then a crash again? That's literally what happened last week, right? I mean, think about it. Last week, we had the same thing happen. We had a big rally on Monday, a really good rally on Monday, and then basically the market collapsed the rest of the week. And part of that had to do with bonds. Now, I personally think, based on what we saw on Friday, we're starting to see a breakdown of this connection of how the market is responding to bonds, and that happens. Now, let's see if I can pull if I could get 10-year futures here. If somebody knows how I could pull this on the Bloomberg terminal, that would be freaking awesome. But I'm pretty sure it's under fixed income trading. So I will look in the meantime. But I'm bullish here. Let's see. Oh, here we go. 10-year future. I'm going to try to open this up. Let's see if I can get this up. All right. So while this pulls up, then it'll make it too easy. Okay. Well, I'll get to the bottom of it. But we should have Treasury futures coming up here as well. So I will get to the bottom of Treasury futures. But yeah, I'm bullish. And Bitcoin's at $51,000, which it's interesting. Bitcoin kind of sold off a little bit, not dramatically, but kind of sold off with the rest of the market over the last 2.5 weeks. So part of me has, I plan to release some more videos on this with a more clearly defined thesis here on Bitcoin. But part of me thinks, so far Bitcoin has either kind of been tracking the market or leading the market a little bit with some of its moves. The fact that Bitcoin's up at $51,000 right now is a good thing. It's a very, very good thing. I know I was talking to some folks yesterday and even just over the last few days. I know there are a lot of people in feeling a lot of pain right now in the market and feeling, Kevin, we got to get out, we got to sell. It's totally natural to feel that, but I think it's a big mistake. I think the best thing that we could do is really stay invested in times like these. I don't have the 10-year future chart yet. Maybe somebody else has a way of finding the 10-year future chart. Bloomberg doesn't want to show it to me yet, apparently. Who knows? Maybe it'll come up later. But this week, if we see a big green Monday and we don't see a sell-off going into the close Monday, that is, we see, maybe by big green, I mean, maybe we see 5 to 6% green on some of the stocks that have sold off heavy, maybe Tesla back to 650 or something like that. And we maintain that throughout the day, and it's a little tenuous, like, okay, like, when is the sell-off going to happen again, right? Then we roll into Tuesday, and if on Tuesday we get another green day, I strongly believe that institutional investors are going to be watching this market like a hawk, and they are going to say, hot damn, there are some killer frickin' deals right now in this market. Do remember that institutional investors are all about trying to react quickly. If they believe there's a bottom, they'll come right back in. Now, there is the fear that, oh, what if this is a bull trap? You never know, obviously, right? But one thing that I can say is the number one thing I remember, and I'll never forget this my entire life, the number one thing I remember in March of 2020 was every day I was buying, for every purchase I made, there were 10 people saying, or I should say, the numbers don't align here very well. I should just say, for every person who was publicly saying in the comments they were buying in March and April, there were 10 people going, bull trap, big mistake, it's just getting worse. We're just getting started. And I'll never forget how one of the reasons back in March, I didn't go into margin. I had zero margin in March. And I remember looking at my account like, it feels like I'm at the bottom. I spent all my cash because I was buying it like crazy, right? So I was buying that March, April period. I refinanced properties. I threw all my money into the stock market there, March, April of 2020. I think my refinances closed like March 27th, April 3rd, somewhere around there. So really, good timing. But I remember looking at my portfolio like, I could pull out margin. Like if this is the bottom, I should pull out margin. But I remember letting those comments get to me about just a bull trap. It's going to go down again. It's going to get worse. It's going to be a big double dip. And generally, you have to have a lot of fear to get a real big double dip. Now, sure, there are plenty of charts, like individual charts on individual stocks where you could identify bull traps. And who knows, maybe we are in one. But I like to say never squander red. Buy. And the big thing that I took away from March and April was when there is blood on the streets and people are panicking and freaking out, and people are telling me, don't invest, Kevin, it's a bull trap. Usually that was a sign for me that sentiment was so negative, it's actually the perfect time to invest. Who knows? When I get suspicious is when you do and this happened with CCIV, okay? It actually pissed me off. I didn't really talk about it, but it was something that was pissing me off. And it's one of the reasons I didn't buy any CCIV after my initial purchase until it crashed. One of the issues that I had was CCIV kept going up. It was like 5%, 5%, 10%, 10%, 10%, and it just kept going up and up and up and up. And one of the problems I had was anywhere you looked about CCIV, everyone in the comments, in forums, in discords, public sentiment, everyone is like, why would I buy any other stock? Let's just buy CCIV. It'll be up 10% tomorrow. Those are the times you want to be careful. When everybody else is like, it's a sure thing, can't go wrong here. Y'all know I'm pretty sure I was the only YouTuber saying, just be careful. If they change the valuation on us, this stock gets bloody. The only person to say that. And I got a lot of hate for that too. A lot of hate. People are like, oh, for somebody who, I'll never forget this one either. For somebody who supposedly invested $500,000 in Lucid, you sound like a bear. This is something to that effect. It's just, so that's one of the things, obviously looking at sentiments like that, it's harder to quantify. You could use sentiment trackers, but that is a reaction I have. When people are telling me, oh, bull trap, don't invest, don't invest, don't invest. Usually I like to invest. And when people are like, oh, I can't go wrong, let's go on. That's usually when I don't want to invest. So keep some of those things in mind. Okay, so when is the Chamath interview? Oh, man, we got a joker here. Yeah, many of you who have been watching my live streams know that together we tweeted Chamath on Friday about, why he sold completely out of Virgin Galactic. Now, I am always interested to listen to people's perspective and a dialogue. I have people on my podcast that have completely different views than I do about things. But I'm fascinated to listen to anyone's perspective because I think there's a truth in there is an average truth in everything somebody is saying, right? Like there's something in people's brains that like you get a little bit of truth from everyone. Like there's not one person that has all the truth, right? So I was like talking to different people. So I thought, hey, like let's tweet Chamath. And this is something that I remember we were chatting about this in the live stream last week. And I'm like, oh, should I tweet Chamath? Is this too harsh? And, I think we all took this point of view that us asking Chamath why he paper-handed was obviously a joke, that we're just kind of like being playful. Like, hey, man, like, would you buy? Like, where'd you put the money? Apparently, he took serious offense to that. Sorry, Mr. Twitter. and I mean, look, Twitter's a minefield. I mean, there's some pretty nasty things people say about other people on Twitter. And Chamath has not been exempt from that, right? He's had some pretty harsh things to say about people on Twitter. So I thought, come on, playful. Why'd you paper hand? Space can't hurt. Nope. Got blocked. So yeah, I don't think that interview was happening. So, but anyway, okay. So futures market, has anybody figured out how I can somebody in the comments let me know how I can pull up the Treasury futures? Because, you'd think Bloomberg would let me do it. But I'm apparently not able to figure that out. but I do want to see what the treasuries are doing, even though I do think we are going to see a disconnect this week. We already saw it towards the end of last week. We already saw achievement unlocked. We already saw the relation between the 10-year and the stock market fall apart last week. So on Friday, we had complete correlation between the 10-year and the stock market, which is very, very odd. Market Watch. Yeah, I tried Market Watch. Let me try it again. Market Watch 10-year Treasury. Let's go ahead and take a peek. So I don't know that this is really going to guide us. I don't know. I don't know if this is actually updating here or if this, no, it's, see, even Market Watch is stuck at the previous close. Where do you see that, Jay? The 1.6. Yeah, we'll figure it out. Anyway, so this week, I'm excited. So what am I looking for this week? All right. So I spent the vast majority of money I have. I have a good chunk of money available in cash. And this is actually a conversation I had with Lauren the other day. We were talking about how much margin we have, which obviously when your stock value plummets, if you're at, let's say, 20% margin, but the value of your stock plummets, the outstanding percentage of your margin as like a proportion of your portfolio obviously goes up. So, I think we're like at the pit of last week, we're probably at like 47, 48% margin. I mean, Friday was interesting. We had a fat dip. I mean, I could have probably been over 50% margin for a period of time there. And so we were talking about, hey, like one of the reasons we've got a chunk of cash that we've saved just from other income or from some of the sales that we've done, the stock sales, when we sold stocks before February 19th, was just so that we have that in the event we get a phone call going, hey, margin's calling, you got to pay down a bit. We would want to be in the position to be able to do that. So that's one of the downsides of margin is you got to be prepared and have sort of, I like to call it multiple break glass layers. So somebody here mentioned /TN is the 10-year Treasury future. Travis, let's give it a shot. But let me explain that really quick. This multiple break glass thing, just really quickly for me, multiple layers of breaking glass means, look, if I'm at 20% margin and the market sells off to the point where I get a margin call, I'm going to have backup strategies. The first thing I'm going to do is whatever cash I've had is going to go to pay that, to try to clear that margin. That could mean buying additional securities in a dip in a margin account, which you can do. I mean, like if I get a margin call and I buy a bunch more securities and something I can margin, yeah, but with cash, then that gives me a larger account value relative to the debt I have, and I can offset a margin call by basically providing them more collateral. So cash is obviously the easiest break glass. The second thing that I always like having, which is one of the reasons all of you should own freaking real estate, which you got a whole course on buying real estate, so you can actually get a good deal. Everybody should have a home equity line of credit. And ideally, your home equity line of credit is max value, but low draw to no draw. So for example, and I got to update my home equity line of credit because I'm not at max value on mine. But I've got a $125K home equity line of credit and then like another, I don't know, $150, $160K in business lines of credits, which you could do with a business as well. So I have somewhere around $280 to $300K in credit lines. That would be another option for me. I keep those purposefully paid off. So that way, if I needed those as a way to buffer me on a margin, those are another like emergency break glass, right? In a margin call. And then the third phase of battling a margin call is, in my opinion, trimming stocks that have fallen the least. So those would be, in my opinion, things like Apple and Amazon. Those guys might be down 10 to 12%. They don't hold a candle to the loss that Tesla has seen of like 33, 34%, right? But I wouldn't want to sell Tesla on such a depressed level. So that's usually a quick sort of outline there. Okay, so somebody says TN /TN. Where would I type /TN? Let's see, 10 TN. No, that's not something that comes up. Maybe if I type in Treasury future, future 10-year. Okay, maybe this would work. TYA. Is that going to do it? I have no idea. Line chart. I'll try. I really do. I would love for the Treasury future to show up. but I don't think I'm in the right place for this. Margin cost, actually, I think y'all just writing things. ZN is the main 10-year future that I know of. Okay. Okay, hold on a second here. We can actually, so here's TYM1. This is the 10-year note. And so this one, if I go back over 3 days, and I'll try ZN in just a moment, but take a look at this. I'll share the screen here. This actually is looking pretty good for us. If there's any leftover linkage here. So we, on the 4th, had some big spiking here. Let's go back a month here. So this is the last month. I think this might be on a specific bond, though, huh? 10-year Treasury note. Because I don't see that particular spiking that we had here. This particular note is declining, so I'm not sure which this one is. I'll try ZN as well. But this particular one has declined a little bit. Let's try ZN. But that could also be pricing, which would mean the yield would go up. I'm not familiar enough with these bond futures to be able to find it. ZN. I have no idea what ZN either. So anyway, USTY, yeah, US 10-year. If I take this in, I just don't see, the futures just don't load yet on this line chart. So this is where we usually look at the 10-year yield, but this is stuck at 1.56. And it's supposed to show me the futures right here. See, like at least the clock starts right here, but we don't have those yet. So I just don't know how long it takes for this to actually show up. But anywho, so, okay. So that's at the margin break glass plan. What about this week? Like, am I going to add to the market this week? Well, let's take a look first here. It looks like the Dow has settled down a tiny little bit. We're at about 210. Oh, those are Thinkorswim tickers. Oh, okay. We've got futures on the Dow up about 0.66%, S&P about 0.57%, NASDAQ up about a third. Not as high as we've seen. This was a little higher, just in the probably does charge me extra money for futures. Yeah, probably an extra setting. It's a chart element, I believe. Okay, I'll play with that. But yeah, I mean, if this week we see a really nice, Green Monday, I don't know that I'm going to buy heavily tomorrow. If we see green again on Tuesday, that might be a sign that maybe we're turning the corner. Now, obviously, if that's the case, then it would make more sense to have bought on a Monday than Tuesday, right? But I am tempted to take a little bit of the cash that I have set aside as sort of a piggy bank, break glass, and emergency, and potentially buy some stocks that have gotten cheap. And there are a lot of them. You know, I mean, we mentioned them up. I mean, a lot of these oversold stocks. NEO under $40. It's ridiculous. Let's just look here really quick. So this is Webull. Obviously, this is updated as of Friday. We don't have what things are going to open for tomorrow yet. But look at this. NEO, $38 freaking dollars. You kidding me? It's dirt cheap. GHVI. Matterport, $14. Relatively cheap. Not as cheap as it dipped, but relatively cheap. FRX, here's another one. FRX, $12? I mean, this was so high flying, and there's so much excitement around this with the Disney executives. My gosh, at $12, this is dirt freaking cheap. Like, how could you not be buying right now? And, you know, the worst thing, in my opinion, that you could do in a situation like this, and this, you know, this is just something to keep in mind for everyone, okay? The worst thing, in my opinion, that you could do in a situation like this is panic sell like a Palantir or a Tesla that aren't going anywhere. Panic sell those and then turn around and buy some kind of index fund like Buzz, which you know, Buzz tracks an index, or some kind of exchange traded fund like an S&P 500 index fund. Why would you sell something that fell 33% and buy something that fell maybe 5%, right? Like what? Okay, so maybe that the index fund will go back up 5%, but then the other stock you sold off goes up 30%. It's like, what? Why? It's not something that I would encourage doing. I mean, personally, I'm not encouraging selling at all. Like, I don't care that my portfolio has had a big down arrow. Obviously, it's more enjoyable when there's a big green arrow, but I just don't look at my portfolio value. I'm looking at, oh my God, Neo under $40. This is freaking dirt cheap. Enphase, I'm pretty sure this thing's under 150. I'm like, come on, man. Like, I buy that thing at 190 because I think it's a good deal. At 143, I just feel like I'm in the mask, and I turn a corner and I got the eyes coming out and the jaw dropping. You guys have seen The Mask. You've seen The Mask, right? Come on. I know we've seen The Mask here. Hold on. Let's do it. The Mask, eye drop, or jaw drop is probably the more. Yeah. I mean, it's something like this. That would work. This is what I feel like right here when I see some of these levels. Okay, like, why would I sell? I am so excited to be able to see the deals. Like, what? Selling is what you should be thinking about, where, like, if you were wanting to sell when things are euphoric. But Bitcoin is, by the way, rallying right now. We've got we had a little bit of a sell-off about 3 hours ago, so we're kind of returning to levels that we had. But over the past month here, obviously we're still down from the highs we saw, $57,000. But I'll tell you, the Bitcoin research that I'm doing, I'm very bullish. I'm not adding to Bitcoin right now because there's so many of, what we need? Can somebody send me the sound effect for this? That would be cool. We could we could do our soundboard. Like, we just need that right here. Something like man. But like boing. Yeah, anyway. One of the reasons I'm not adding to Bitcoin right now, because why would I add to Bitcoin when everything else is dirt cheap? It doesn't make sense. Okay, so somebody sent a super chat here asking about Robinhood margin versus other brokers. They finally dropped their margin rate, which is much better than what it was. You may be part of an ETF without knowing it. Oh, a social sentiment ETF? Cool. So what? Like they determine is Kevin drinking beer on a live stream versus not? Cameron Diaz was in that movie. Yeah, absolutely. So let's see here. Dogecoin is up. Yeah, very, very bullish on Bitcoin. But at these prices, I'm not going to squander the cheapness that we have. PayPal just confirmed they are incorporating Ether. Freaking awesome. I mean, the future of Bitcoin and Ether, very, very, very excited about them. Somebody says check CNBC. Are you saying that in reference to the to the 10-year Treasury or what? Australian shares jump 1.7% in early trade in fragile market. I've never looked at this before, but let's pull this up. Is there a way? Well, I mean, I was going to say we could look on Bloomberg, but interesting. Let's see how Australia is trading. So let's go down to 5-day here. Did I accidentally zoom in too much? Yep, apparently. All right, we'll just have to refresh this. There we go. Okay, so what do we got here? So let's go down to 1 month. Okay, so this was Feb 20. They had an interesting market here. Very, very kind of sharp ups and downs here in Australia. I don't know anything about the Australian market, so maybe this is not going to help us at all. But let's go to 3 month. Yeah, see, this doesn't really track the way I feel like our individual stocks have been trading, because we did have our sell-off on the 19th. They are down from the 19th. Okay, you see that a little bit here. But then again, our S&P 500 isn't like it's exactly down like hardcore. It's not like we've seen the S&P 500 fall off. S&P 500. I'll just put stock. I know it's not a stock, but it's just an easy way to pull it up. Let's look at how this feels. Yeah, I mean, so if I go to like the 1 year on even the S&P 500, like you're not seeing that kind of pain the individual stocks in the tech sector are, right? So not such a terrible surprise. Not terribly surprised. Bitcoin to 70K by April. Yeah, I believe that. It's I do believe that, especially since we've got so much enthusiasm around the potential for inflation, but not just the potential for inflation, which I do think will pump up Bitcoin, but also just how mainstream not just Bitcoin is going, but even NFTs and the amount of money that's flowing into these. DD Crew, where are you seeing the 10-year Treasury future? I'll just try to Google here. 10-year Treasury futures. It'd be nice. 10-year Treasury futures. Oh, okay. Maybe this is easier than we thought. So let's see if they actually give us something that's dated today. So 6 months. Can we get to today? No, see, I don't see today. I see the 5th. So even that, maybe the futures just aren't open yet. On CNBC, I bid on CNBC. CNBC 10-year. Last time I checked here, oh, they did start showing it. You're right. Okay, here we go. Did they though? Let's go to 5-day. I don't know. Like even the chart right here. No, it might be. Maybe it's just not charting. But maybe they're showing they're updating the future price here without updating the chart. That could be. The timing's right. You know, it doesn't have the closing time as of last week, Friday. And if we go on over to the Bloomberg, we still don't see it moving over into the future section here. But maybe if I just go to top news, maybe we'd see it over here. But I'm bullish this week. Let's see. Yeah. Okay. So what else do we have here? U.S. stock futures gain on growth. We could look at the Market Live blog. That's maybe what we could do. Stimulus-fueled risk bounce likely to come with higher yields. That's interesting. Let's take a look. Let's dive into this for a moment here. Risk assets are poised to start the week with a spring in their step. Okay, so risk assets would be like tech. That is sold off, in my opinion. Let's see what they're saying here. It depends on the author of the article that you get in terms of what they're describing, but let's see here. $1.9 trillion stimulus, surge in China's exports, all likely to point to further gains in the Treasury. And see, this is what I think we started seeing on Friday. It wouldn't shock me to see the 10-year Treasury go up, but stocks to go up with it tomorrow. That relationship fell apart on Friday. That's my take. Congratulations, Alex, on getting into Dave & Buster's and diamond handing that. Good job. Very, very good job on that. 159%. Congratulations. Thank you for the $5. President Joe Biden's COVID-19 relief package exceeded many Wall Street estimates. Yeah. So here's the other thing. Wall Street said that they are pricing in, and by Wall Street, I should clarify. Bloomberg said they are pricing in $1 trillion as a stimulus package. They said that 2 months ago. And I made videos and on live streams, I was talking about this, saying, I think Wall Street is underpricing how big this stimulus package is going to be. I feel like they actually thought that or believed that there's going to be some bipartisan deal with Mitch McConnell. And I'm like, why? They're going to do the 1.9. I felt very confident about this coming. We knew it was coming a lot slower, but I felt pretty confident about this thing happening. Obviously, I got a little bit blindsided by the changes that we had here with them shaving again who was eligible for the stimulus check and reducing the unemployment from 400 to 300, the boost. But the 1.9 was something I was pretty confident in, and I still believe that the market has not priced that full package in. Okay, let's see here. Reconciled version still have to be reconciled before the bill becomes law. Obviously, then that has to be rubber stamped. The yield on the 10-year Treasury note reached 1.62 on Friday, highest in more than 2 years, almost exactly a year after the spread of after COVID through markets. Warning sign. Let's see here. U.S. inflation adjusted yields near the highest since June. Gyrations for real yields will set up the tone for global markets. Okay, let's see. Real yield. Yeah, we'll see how much these yields actually affect the market this week. Okay, so they didn't really tell us anything exciting here. Bitcoin pumping again. I believe that. Yeah, just the last hour since we started the live stream, Bitcoin's been really pumping for sure. I agree with you on that. In fact, let's pull it up really quick just to show it. So if I push this button and then this button, look at that. I mean, that's nice. This is just the live chart. So it's really only the past hour that we're showing right here. If I go to the past day, obviously we had, we're hitting new highs for the day here. If we go to week, we're at a high on weeks here. Or no, not quite. Not quite at a high on a week here because we'd have to be at about 52.5. Which, by the way, I still love the fact that you get paid some fat interest over at BlockFi. If you haven't checked out BlockFi yet, just try it. Go to metkevin.com/BF. I don't get anything for you just going to the website. There is a bonus if you actually sign up and deposit money. You get up to $250 for free. But yeah, I mean, they pay some nice interest on your Bitcoin. I think the yield right now is about 6%, which is pretty awesome, depending on which cryptocurrency you have over there. And then, of course, over a month, we are still off those highs of 57,000. But it would just not shock me to see $100,000 on Bitcoin soon. Again, I'm not adding right now because there's just so many opportunities here in the stock market. So let's go back to the top here. Let's see what Wall Street's reading for Sunday evening here. China's exports surge from 2020 lockdown as demand booms. This, right? I mean, to me, this is a lot of what we're going to see in the future of our just global economy here. We're really going to see strong global demand just from all countries, really. Let's look at the Market Live. Let's see. I don't know if they actually update this on a Sunday. Market Live blog. We'll see. Oh, they do. Will assets gain? Okay, what assets will gain the most from stimulus? So, will the so-called recovery stocks like airplanes and hotels fare best? Biden's infrastructure, will all stocks rally? Oh, they're just asking questions here. They're not really providing any insight. Okay, well, that's boring. Oil set to extend rally, taper tantrum to reflation peak. Okay, some other ideas here. I think Sunday, in terms of news, Sundays are usually pretty dang slow news days. Sometimes it feels a little boring, I have to say that. NASDAQ futures started falling from an opening high. Oh, let's take a look at that. Okay, yeah, we are seeing a little bit of a decline here. We went to a high of about 220 on the Dow. And remember, futures are just a suggestion. They're not a guarantee that we're going to see green tomorrow. But let's zoom in a little bit here. So if I go to the 1 day, yeah, we do see a strong open here on futures for the Dow. But we do also see this sort of softening. Looks like we opened at about 31,664. And right now we're still up about 199 points. Sorry, that's actually where we are right now. We are up 192 points to this marker here. And we do have the NASDAQ down, only up about a quarter right now. And this was up a little bit more than 0.5% when we started this live stream. So we are starting to see the futures market, some optimism in the futures market to start with, but we're seeing a little bit of that optimism pare back. So it'll be interesting to see how our stock market opens, in about, what do we got? 12 plus 3 minus a half, 14 and a half hours. We'll be hanging out together here on the on the futures, or on a market open live stream rather. All right, let's see here. GE, Mexico, okay. I don't know, oil jumps above 70. That always hurts too in terms of inflation. Biden orders move to blunt GOP assault on voting rights. Nothing like particularly dramatizing here in the market. Certainly, we haven't gotten much out of the Federal Reserve. Let's just look for a sec on just Fed. See if we can find anything on the Federal Reserve. Anything the Fed says tends to move the markets. How cool would be does somebody have a connection to get Jerome Powell on our show? Can we make that happen? That would be awesome. We got a lot of information from the Fed actually here. Jeez. Okay, let's just try news from the Fed. Fed news. Let's make this a little simpler. No, let's do this. Let's go to Wall Street Journal central banks. Jump on over here. Okay, so Bank of Japan is sitting on a pile of profit, but isn't sharing the wealth. Then shrug off rising bond yields. Yeah, I mean, we talked about this last week about how the Fed they don't really care that the yields are going up. They're basically taking credit for the yields going up, which is pretty hilarious. But anyway, I'm still going to be looking for some opportunities tomorrow. If we get more red tomorrow, I wouldn't be shocked if it's soft red. And even soft red could be an indication of that potential turn around the bottom. We'll see. James says, check out the note from Bank of America analyst Friday where they outlined the Fed's potential moves. Can't say what that's terminal. I mean, I'm happy to see what Bank of America said, but that sounds like research, which is a little harder pull up where I think somebody would have to guide me to be able to find out where the heck that is. But if I just type in Bank of America here, sorry, let's get out of this. I want to try to get into the actual equities. But it would be interesting to see what Bank of America thinks. Bank of America equity. Here we go. Here we go. Okay, so I mean, even if I just go to individual news, we could just see the news on Bank of America here. Must have a problem. No. Yeah, as expected. Not too easy to be able to see that. We'll try though. All right, so if we scroll down here, will the Fed? Okay, what do we got here? Is this from Bank of America? Will Fed shift focus to inflation? Barron's. Oh, Barron's is such a good website, by the way. Great company here. The market's thinking about interest rates have gotten a little twisted as of late. They threw a bit of a fit in the past week with Jerome Powell when Jerome Powell tried to be straight with them. This is so true. Like, I thought Jerome Powell was being so blunt. And honestly, he was almost being uncharacteristically blunt. So let's see here. Twist reverse to the yield curve, specifically an increasingly sharp upward tilt. Great. Okay, what's their point here? Let me try to get to the point of the article. We know what Powell said. Going back to history. Okay. Just talking about how historically 2.5% on the 10-year is not uncommon. Yeah, here's a research note. A 1% rise in treasury yields would increase Uncle Sam's annual interest expense by the equivalent of double of NASA's budget. Okay. Interest costs 1% above the CBO's baseline estimate would add $9.7 trillion, more than 10 times the annual budget deficit. Yeah, okay, let's see here. The Fed has engaged in Operation Twist a couple times. When they start buying longer tail bonds. The question is, will there... this is just seems like commentary here. Okay, here we go. Yield curve control may well be a topic of discussion at the next FOMC meeting, which ends March 17th, St. Patrick's Day. There's nothing to stop the Fed from shifting its monthly bond buying towards lengthier maturities, but the monetary authorities are unlikely to act immediately. Yeah. Raskin suggests that a jump in the 10-year Treasury to 2% could elicit some response. Okay, interesting. So in other words, maybe we'll be waiting until that 10-year gets to 2%, and maybe that becomes a catalyst for for us to see the Fed sort of dive in. Somebody says they fought the Fed and won. Okay, in the short term, you can. CPI data on Wednesday, not sure why expectations are so low since the pandemic last year started mid-Feb and out of March, oil fell for... well, remember, CPI data that comes out this month will be reflective of February. So here, we can look, for example, watch this. St. Louis Fed CPI. And I know a lot of people don't believe the CPI data. I get it. But this is actually, and the Fed uses PCE. But we'll just pull CPI here. So February, we were actually not bad. We're at 258.8. And if next month we come in at a CPI of, let's add 0.7 here. Say we come in at 263 just to round. We come in at 263 as a reading. 263 divided by 258, 258.8. We would have an annualized inflation or CPI reading of about 1.6%. That's not bad. That's kind of nominal, right? That's not when we're going to expect a big reading. Like this next CPI reading, I think is going to be somewhat benign. If anything, I expect like the month-over-month data, that'll be where people will pay more attention. But this annualized data is not going to be interesting until certainly until May or April or May. That's I think when we'll get some more, like we'll see the 2 to 3 to maybe even 4% year-over-year inflation. But again, it's a total myth because we had a big dip last year, so nothing to see here, so to speak. All right, let's go back to top for a moment, and then let's look at the equity futures again as well here. Hold on one second. Let's type top. Let's get messing everything up. Let's get top news pulled up right here. Let's look one more time here at, can I not put that back in there? Get back in here. Okay, I guess not. Fine. All right, so yeah, look at this. The Dow is actually selling off here in the futures. We've actually got the NASDAQ turning negative. I feel like, is there a slight delay on this? Let me see. I hope there's no delay on this. Maybe there is. I think they want to charge you more money. That's one of the things. Futures. NASDAQ shows it as, they're about at roughly the same place. And very, very similar here. Yeah, but anyway, so we've got the the timestamp here. I mean, oh yeah, it is. No, you're right. This is actually 10 minutes behind. So the Bloomberg is giving me a little bit of a 10-minute delay here. Oh, that's annoying. You know what? A place you could actually get this for free, at least the futures. I'll tell you, the Bloomberg hasn't been great for immediate pricing. It's so good for like research and information, but for immediate pricing, it kind of fails us. Look at this. And I'm not sponsored by this company. I don't, whatever. But investing.com, download this app, investing.com. And so it shows us that the Dow, a California bill would ban separate boys and girls toy sections in big department stores. All right. So the notifications. Anyway, we've got the Dow up about a third, the S&P up about a third, but tech is flat. So there could be still some pain in tech tomorrow. We're not necessarily going to see a big pump tomorrow. We do have at least the futures on the VIX down, which is good. I mean, so far it looks like maybe a soft a soft green open might be in store for tomorrow. I'm optimistic, especially with this stimulus package here. I think that's one of the things that we're looking at as obviously being exceeding expectations. So going back, let's see here. Going back quickly to just the top stories here on news. Let's see. Oh yeah, and by the way, oh yeah, of course, as usual, make sure to join me in the private live stream we'll be having tomorrow as well. Get 38% off using that expiring coupon code HODL. That does expire in 7 days, 8 days. Anyway, going back over here. What do we got over here? So it doesn't look like much other news really coming down right now. We've got billionaire Mackenzie Scott marries Seattle science teacher. Wow, she remarried. That feels like it was. I feel like they're divorced. Oh, it's probably been a few years actually. Bezos divorce. That's probably been a few years. Okay, well, okay, good for her. Yeah, U.S. stock futures gain, but this was a little bit dated here. We're about 10 minutes old here on the Bloomberg front here. Yeah. Okay. So we can look really quick at CNBC and see if we can get that 10-year updated. Yeah, it does look like it is updating. Falling a tiny little bit here. We don't have the actual chart yet, but that's okay. We do see the yield up a little bit. So 1.59 actually gives us a jump up to somewhere around here. Let's look at the 5-day just to see what that would kind of look like. Yeah, it would actually go back to highs. So we'll see the 10-year jump back up to highs right here, which are the highs that we had on Thursday, Friday highs. After Jerome Powell spoke and basically crashed the stock market. Wow. Incredible. Well, I would say buckle up. This is going to be a very telling week. We either have a recovery this week or we continue into the doldrums. I will say futures are not holding up as strongly as they could. The Dow at one point when we started this stream was up 225 points. It's up 87 points right now. The S&P 500 was up over 0.5%. It's up about 0.2% right now. And tech is flat. It's trading. A little bit neg, a little bit positive. Whew, buckle up. Buckle up. All right, let's see here. Let's see what kind of other questions are. Chart for 10 years. TNX. TNX, is that for Webull or for here? TNX. Oh, maybe it is this. Ooh. Probably going to give us that 10-minute delay again, huh? If I go to a day? I don't know. I don't know about this. All right. Other questions here. Billionaire marries Bloomberg Terminal News. Billionaire marries science teacher. This is the quality news you pay for. Let's see. Yeah, let's get Pelosi on here. That'd be cool. And let's get McConnell on here too. Like, just if I get a Democrat, I have to get a Republican. We'll have to do that. We'll have to like trade back and forth. So let's see. If the Fed caps bond yields at 2%, wouldn't we see hyperinflation? Well, I don't think the Fed's going to cap bond yields. I mean, maybe if they come out and buy a lot. I mean, the way they would cap them is by buying, which means potentially printing more money. But I don't think they need to. I don't think we're going to see yield curve controls. There have been a lot of rumors about that, but I think the Fed's very interested in letting the market be able to do its thing, which I know sounds crazy with all the money printing they're doing, but I wouldn't expect that. You know, with DeFi on your blockchain, DeFi, is that actually a public company? Use the $sign DeFi. I mean, I think decentralized finance is amazing, but I didn't know that this was potentially, DeFi, a tradable security here. DeFi Technologies, is that what you're talking about? RDNAF, DeFi Technologies. Let's see. I mean, we've had an incredible run over here. I mean, it looks like it's gone from, well, penny stock. It's still penny stock. I don't know if this is the one you're talking about. Yeah, is it? Okay. We'll have to look into it and see what that is. All right. So futures still selling off. The more I talk about, if you want my account, I paid for live, I can message you. Oh, I appreciate that, Yash. How much is it? The live quotes. I wonder. Yeah, because come on. Why do I have a 10-minute delay on Bloomberg? I appreciate that offer there. Yeah, interested in. Honestly, I've lost a little enthusiasm for some of the Chamath SPACs. I don't know why. But yeah. Okay, Dow very volatile right now. At the very moment, we went down here to about 69 points in the positive, but actually just jumped up to about 103 points, with tech futures actually down about 0.05% right now, so a slight decline there. Yeah, you'd think. I think so. I still do think this. The question here is, I thought the COVID relief bill would help stabilize markets. I do think we should see some positivity from markets tomorrow, but who knows? Who knows? All right, folks. I appreciate y'all being here. We will see y'all tomorrow. It'll be very, very fun. Buckle up, though. It's going to be a crazy week, folks. All right. Cheers to some coffee. Enjoy your Sunday evening, folks. We will see you tomorrow. And thank you for the $10. I don't know anything about Air Canada, but I will tell you, I'm not very bullish on airlines. Personally, okay? I'm not investing in any airlines right now. Thank you so much. We will see you soon. Tschüss.